I'll be happy to see 9,000, and I'll be happy to see $150 silver. And I think both of those figures are reachable, and I think they'll be reached in spite of the work that's going on in the blockchain space now with Bitcoin, because I see silver, gold, and Bitcoin as partners in asset allocation and asset preservation, not competitors.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $3.80 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend David Smith, the senior analyst at the Morgan Report. David, thank you so much for joining us today.
Very good. It's good to be back, Elijah.
Definitely. It's great to have you. And I wanted to talk with you today about kind of the current time period in the metals market. Historically, you've mentioned that the mid-August timeframe to Labor Day is kind of when we see a revival or a strengthening in both gold and silver and also the mining sector. So what are you seeing right now?
Well, I think we're seeing a two-sided action going on with a few days ago. The gold and silver were quite strong, and the mining shares. And the last couple of days, they've been back and forth, weaker. And so what we have is the shaking out of the weak hands that haven't given up yet this summer, and people repositioning for into the fall, which tends to be a stronger period, a much stronger period for the metals and miners. And so if people aren't buying what looks like a good buy now, they may regret it before too long, and that includes physical.
And what kind of factors do you think are maybe going to push the metals higher kind of into the fall?
I think there are several things going on now that haven't been even close to fully digested by the market and thus transferred into people's expectations for metals and miners. One of them is the ongoing fiasco in the exit from Afghanistan, which probably isn't going to play itself out anytime soon, and it has all sorts of really unintended consequences potentially standing in the wings. How that's resolved is going to play quite a role in what takes place. If we end up with a hostage situation, if we have to send in another 10,000 troops or whatever. And this is a different setup when gold was nearing a blast-off phase in 1979. But I remember the day that it was announced that the Soviet Union had invaded Afghanistan and gold went through the roof. It was up a couple $100 within a few sessions on its way to 850. And so this is a reverse situation, but the implications for us are quite profound and may take a long time to play out. We just can't figure out, how that's going to affect our standing in the rest of the world, and whether we're going to get the people out that want to come out, the Americans, or whether there'll be a hostage situation or a shooting war. It could be very, very messy, and that sort of thing will cause a flight to safety if it happens in the markets, and that will benefit the metals and miners. And of course, we want things to work out. We don't want things to not work out, but you and I are not able to influence that outcome one iota. And so what we can do is observe it and try to protect ourselves from it. So we're doing this in a way that is trying to provide some insurance for us. And that's just one thing. I think also that inflation is coursing through the economy for a number of reasons, which I think it looks a lot like the 1970s stagflation. There are some new ones too, regard to COVID and the lockdowns that are going on. These things are just causing all sorts of jump starts and stops in the global economy and in supply and moving things around. It's causing some real issues. I mean, in England, they're talking about people should buy their Christmas presents early because there may not be any. I mean, this kind of unease and uncertainty causes all sorts of problems, and that's reflected in people's flight to quality, and they're concerned about how good the stock market's going to be going forward. So the metals benefit from this because they're insurance first and profits second, physically, by holding that. But the mining stocks, when the metals go up, they can make more of a profit in what they're selling, and so the shares tend to become more sought after by investors. So it's a two-way situation that benefits the market that we're in going forward. Another thing is the COVID situation where from one week to the next or even day to the next, in any country, you don't know what's going to happen. For example, they're locking down New Zealand until early 2022. One COVID case has been found, one new one. I mean, this is unbelievable. And in Hawaii yesterday, the legislators are saying, please don't visit us to travelers. I mean, you don't think that has an effect on business? So all these things are just causing all of the uncertainty. Markets hate uncertainty. And so these are just a few of the things that we're going to have to deal with because we don't know how they're going to play out.
And it's curious because amid all this uncertainty and fear about the economy, the COVID situation, and also the Afghanistan situation, we've seen metals fall in the last month or so. What do you think has been driving the prices down, and also how has the mining sector reacted to this?
Well, I think what's been driving prices down, there are a couple of things. One is the melees that takes place in the summer where people are doing other things, and traditionally it's a fairly weak time. July often is a weak time for the metals. And so there are less participants on the buy side and more opportunity for short sellers to go in and hammer things down. And what happened about a week ago on a Sunday night when gold was driven down sharply and silver in very illiquid markets, when thousands of contracts were pushed into the market. This is not somebody trying to make a little bit of a profit. This is an engineered takedown. But what was interesting is how fast the market came back up, by the morning session. I remember looking and seeing silver hit $22.90 overnight, and the next morning it was trading near $24. I mean, when you think about it, these are huge moves because for many years, silver would move maybe 15 or 20 cents in the session, or maybe 30 cents in an overnight session. But to move a couple of dollars, and we're going to see more of this, not only during the intraday sessions going forward, but also nighttime as well when markets are trading overseas.
Now, I know Rick Rule has often stated that right now, if you look at investment portfolios, precious metals make up about less than 0.5%. And historically, if you look at like the 3-decade mean, he mentions it is more around 1.5 to 2%. So if it was to revert to that, his quote that he said on this channel is, with respect to what we've seen in 2021 for silver demand, if we saw that tripling or more of demand for precious metals, he says what we've seen this year, you ain't seen nothing yet, he said. So what is your perspective on how the demand for precious metals and if it will increase in the future and how that will impact the industry?
I'm completely in accord with what Rick Rule says about this. In fact, I've heard him in a couple of his face-to-face conferences say that the mean is closer to 2 to 2.5% of invested assets, in the investment sector. And that's the mean. That's not an outlier. That's not a precious metals boom. So to think that it's going to stop at 2% once it gets going is probably too conservative, and it could get to 3 or 4%. And we're in a global situation now with regard to the movement of the metals. We've never had that before. In 1980, it was very contained in terms of the number of people in North America that were involved. Asia was hardly a factor. There were a few people in Saudi Arabia. That was about it. And now everybody is involved about this. Just looking at the Wall Street Bets silver group alone, there's 150,000 followers now, many of whom, if not most, are investors, and many are buying physical silver. That group didn't exist a year and a half ago. So that's just one little anecdotal data point. Multiply that by hundreds of other data points, and with all the currency destruction that's going on in South America, Argentina for several years, and now, Venezuela, and now Argentina having 50% inflation. Their 100-year bonds they're trading at about 60% of what they were issued at a couple of years ago. I don't think they're going to make it to 10 years, let alone 100. And inflation in a lot of other areas of the world, like Lebanon and Turkey, and now our country, where in July the producer price index, which I think is a more accurate indicator of where inflation is and is headed than the CPI, was 6.8%. Well, and I don't think that's the high for the year. So these are the things that people really should be paying attention to. And by the time everybody gets it, it's going to be a little bit late to try to get on board. So if you want to be a spectator, just sit around and wait till something happens until what you think might happen is confirmed. If you want to be a speculator and an investor and someone who protects some of your wealth with insurance, then don't do that. Go out, and when premiums have retreated now a bit in silver and gold, and it's a little bit more available, pick up some physical and get to be knowledgeable about some of the mining stocks, because this is where the big potential is going to be. And this is going to come about faster, I believe, in an evolving way than we've seen in the past. We're used to these things taking their time building out, but I think it'll be like 2016, the first mixed 6 months on steroids, where about 8 days out of 10, the market's up. And when you're in a position like that with premiums rising every day, physical harder to get, the mining stocks gapping up, that's not the time to try to lay in a big plan.
And what kind of effect do these purchases, of, in your opinion, of, 10 ounces, 100 ounces, or even 1,000 ounces? Some people might be skeptical that kind of purchase on the real retail level will actually move the market. Your perspective on that?
Well, some of these people are the ones that invest in leveraged plays, and they, they're working through the big brokerage houses and whatnot, and they're doing what's always worked in the past for them. But the reality is, because silver is becoming so distended on the supply versus demand side, we're now in the fifth year, arguably, of a deficit in silver, where less is produced each year. We had one of those 5 years where there was a slight bump, but Keith Neumeyer's talked about this a lot at First Majestic, about that situation. And we have reducing grades by all the top 10 silver miners, primary miners, are mining less grams per ton than they were over the last decade, and this has steadily declined. New deposits are very hard to find. They take a long time to implement. And so when that demand factor ramps up on the part of industry and investment, silver companies can't just jump to the beat and produce a bunch more million ounces. And 70% of the silver comes from base metal production anyway, so they can't ramp it up. So where's it going to come from? So these things are things that people really need to consider going forward. And I think we're going to see a quicker, surprising play in several jumps on silver, like it went from $18 to $29. That shocked almost everybody that it went there almost in a rat-a-tat-tat fashion rather than over a period of a year or so. I don't think anybody would have predicted how fast it would have gone. And so when these things get started again, and especially when silver at $30 is broken, that might be early next year, it might be late this year, the light bulbs are going to start going off, and people are going to start feeling, I'm going to miss out if I don't do something. And they've already missed out on a chunk. But the upside is so massive that why not lay in tranches now, buy a certain amount of what you want, not all of it, but a certain amount. And then when you do that, it works psychologically for you rather than against, because you go, I still want more. And if only the price would drop more so I could get more, rather than, oh my gosh, I bought all I had that I wanted, and now the price is dropping and I'm afraid. That's a whole different outlook. And those are the people in the first case that stay in the market and are around to reap the rewards they justly deserve over time. And those who get knocked out and sit around and say, oh, what did I do wrong?
Now, this movement that you're talking about, I know we've talked recently on this channel about how we have seen this pullback in the metals, and there's a possibility of actually lower prices as well, even possibly below 20. What is your perspective on that? Do you think we could see lower prices ahead?
We could, but I don't think it's likely. But anything is possible. Look at $12 silver a year and a half ago in March of 2020, and look how a short a time that stayed that way. Before you know, it's up to 16 or 18. And also on this, it's something I've talked about before, and I know that you and Andy and others have spoken about it too. People were, when silver, let's say it was $17 or $18, they thought, if it goes to 12, I'm going to load up, right? Well, at $17 or $18, the premium was about $3. And at $12, the premium was about $8. So they got to buy at $12 and pay as much as if they'd have paid for it at 18. I mean, how's the math work on that?
It is pretty crazy how we see when we see these spike downs in price, often the premium will rise, and you're not getting too much of a discount at the end of the day. Now, your perspective, you said there was a silver deficit for the last 5 years. How is this going to resolve? I mean, industry needs silver, right? And if there's a greater push towards green energy, then we need the silver, right? So if more silver is being used than is being produced, how is that resolved?
Well, because the amount of silver that's needed going forward is drawn down from available supplies. And those supplies keep shrinking until the point, where there's a recognition that this doesn't work anymore like it did with palladium, and suddenly there's a price explosion. And silver has an investment potential in addition to industrial potential, and that's the Janus Two Doors outlook. And what you've talked about with the EV vehicles and solar energy and all this, EVs take 3 times as much silver as the regular ICE vehicle, internal combustion engine, and about 6 times as much copper. And all of the fiber optics that are going to be laying, millions of miles of that, and other types of cable that are being put out there with the infrastructure build out, all of these take a lot of silver, not to mention the silver panels and new things that have come up for silver every time you turn around every day. I mean, I've ordered a silver infused pillow just last week that's put together with kapok and silver to be antimicrobial and kill bacteria, And I spray my eyes daily with a little bit of structured silver to make it less likely to get some kind of a virus. And I put silver gel in my nostrils a little bit, and I swallow a small amount of it every day. I mean, I have silver underwear and I have silver socks. And these things, they all take a little bit of silver. And when millions of people are buying them, they take a lot of silver. So those are the type of things that go under the radar screen, but they're out there. Every time you turn around, there's some new use for silver coming out in medicine, in things that I just mentioned. All of that adds up. It's incremental, and at some point, it's like putting that little extra piece of sand on the little pyramid. The pyramid collapses. The supply pyramid.
And it's just so interesting, the distinction then between silver and gold, because gold has a bit of industrial demand, but not nearly as much as silver does. And if we look at, for example, the gold-silver ratio right now, in the last month or so, we've seen it rising up to now where it is about 75 to 1. So 75 ounces of silver purchases 1 ounce of gold. Historically, that is still very high. Where do you expect what is your take on the ratio currently, and where do you expect it to go in the near future?
I just did a presentation yesterday, about 40 minutes presentations for Money Metals. And one of the charts I showed was the range that you just talked about, which had a high of 105 and a low of 15 in 1980. And the range, if you want to do a rough horizontal line across the upper and lower rough boundaries, and they punch through that, but most of the time, they stay within the range of about 40 to 70. And that's a conservative range because you could tighten that even more. But at 40 to 70, when it goes anyways, even up there, we're at 75 now, but actually lower than 70, about 60 or 55 is more common. And so when you get up, when you start going down, plumbing down into 50 and 40 and 30, you're getting into a big change in the silver gold ratio price. And I don't remember my exact statistics, but I think at 40 to 1 silver gold ratio, silver will be $166 at $10,000 gold. And $10,000 gold sounds unachievable now, but Jim Rickards has gone on record stating we'll see $16,000 an ounce gold during this cycle. I think 9 or 10 is kind of built into the software. And Pierre Lassonde, one of the most successful mining resource sector investors and royalty company with Franco-Nevada who's ever lived, says we'll see $25,000 gold, within the next 10 years or so. And so do your math on the ratio for that. And I'm not investing for $25,000 gold. I'll be happy to see 9,000, and I'll be happy to see $150 silver. And I think both of those figures are reachable, and I think they'll be reached in spite of the work that's going on in the blockchain space now with Bitcoin, because I see silver, gold, and Bitcoin as partners in asset allocation and asset preservation, not competitors.
All right. Well, David Smith, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Well, people can write me if they'd like. I can't give financial advice, but I can point you in directions and talk a little bit about what over my shoulder is, what I do. They can write at David S. at lode.one, that's LODE.ONE. And I'd also like to mention that at the end of September, 27 and 28, there will be a Silver Symposium conference in Coeur d'Alene, Idaho at the Coeur d'Alene Resort. And if people want to really get on board about the silver story, if you can get there to show up for that, I think it's going to be a pretty big deal. And we really look forward to seeing people. It's kind of an outgrowth of the Silver Summit that actually David Morgan was one of the fathers of many years ago, that ran in Coeur d'Alene and in Spokane for a number of years. And then for the last 3 years before COVID got started, was carried out by Cambridge House in San Francisco. So I hope to see people there, and I think there'd be an opportunity to learn a lot about the things you and I have been discussing.
Definitely. Once again, David, thank you so much for your time as always, and God bless.
Thank you for the invitation. Take care.
This week's special with Miles Franklin Precious Metal Investments. 2021 1-ounce silver Kangaroos for only $380 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.